I'm Gwen Preston of Resource Maven. We're here at the Metals Investor Forum in Vancouver in November, and I'm joined by Mike Williams of Vendetta Mining. Welcome. Thanks for coming.
Thanks for having me.
So you guys you have some big news that's imminent. So
yes.
Pegmont project, zinc asset in Australia, and the big news that's coming is something you've been working on for quite a while now, which is the preliminary economic assessment.
Yeah, and in actuality, when we picked up the project 4 years ago, we made a conscious decision to get the PEA as quickly as possible and show the economics of the project. You know, it's in the Mount Isa district, which has a lot of infrastructure. We've grown up around mature infrastructure. So we felt rather than go for size potential of the ore body, which, you know, we think, you know, arm waving, it would be a 15 to 20 year mine life. Let's focus on making the first 10 years economic. Let's demonstrate to the marketplace that it works.
Right.
Once we do that, then we can go and start showing, okay, how big this will actually get. So we're there now.
Okay.
The PEA is, you know, I would suggest in the next week or two, we'll be able to put it out. And we did it as a standalone.
Right, this is an interesting conversation. So you did it as a standalone operation. You could build this mine, process facility, do it all on its own, but that isn't the only possibility here.
Well, there's two mills within 25 kilometers, and one is under capacity, and the other is out of ore.
Right.
Now, you know, we could come to commercial terms with those parties. There's lots of variables on there. You know, I always maintain, and I think everyone thinks, you don't need 3 mills within 25 kilometers, but if we have to, we can put it into production ourselves.
Right.
And I would suggest that, you know, probably under 150 million capex. So for even a company of our size, a Vendetta size, we could do that.
Right.
Right. And we also have mature infrastructure on the roads and rail to the smelters.
Yeah.
So that all, it's the nice thing about Australia. It's versus being in, say, the north in the United States, in Alaska or Canada.
For sure.
It makes it a lot easier. It makes it manageable, if you will.
And a PEA captures all of that. It captures the fact that you could do it alone, the advantages of the infrastructure, the metallurgy. It puts it all with a bow on it. And that's what we've been working on now for almost 4 years. So then the question is, once this is done, it's sort of like a new starting line. So what's the next stage for Vendetta now that this big project is happening?
Well, it is the seminal event for the company. So what it does now, we underpin the value of the company, and we start to demonstrate, hopefully, to the market what the valuation should be as we go forward. So we start going down the permitting road. And in Australia, you know, I always say, you know, permitting in the mining industry is never easy. It's manageable in Australia.
Right.
I think if we used one of the local mills, you'd probably, you know, 12 to 18 months you could be shipping ore. And if we built it ourselves, you're probably looking to 24 to 36.
Okay.
So it's reasonable. We will capture this zinc cycle, lead cycle. And what we did is the PE numbers, we use long-term consensus pricing, $1.05 zinc and 95 lead. So what I think are reasonable numbers. So, you know, everything looks good. I think the market will like what it sees. And then we can also look at maybe project financing. It just gives us further flexibility next year. And we're even contemplating if we are going to go down that road, or maybe buying a mill, listing on the ASX, because if you look at the comps, they're almost 50 to 100% higher than the ones in North America. In Australia,
the Australian miners have been kicking butt,
They've been flying, yeah. For a variety of reasons. So I think that gives us another arrow for our quiver, if you, so to speak.
So to speak. Interesting. Let's just to finish, we've been talking about this PEA, the standalone operation. The Cannington mine is one of the two ones that's nearby that needs ore. Just tell us that this is a mine where the head grade's declining, they need more ore. Like this is the sort of perfect fit if the parties come to play.
It looks like a marriage made in heaven. You know, you've got it's owned by South 32, which is a spin out from BHP Billiton, and it's a big company in its own right. I believe their market cap's 20 billion, listed on ASX in London, and that used to be their flagship property. They've just picked up the Arizona mining project for what, 2.2 billion Canadian.
Yeah, exactly.
That's their next big asset. But their Cannington operation, as you alluded to, it's on a declining grade curve, and they've got some production issues. They used to mine at, I believe, 3.2 million tons per annum.
Right.
They're now down to 2.4.
Right. They had a shaft problem. They had a pit problem.
Sequencing of their ore underground.
Okay.
Right. And so I think they had some of the issues with some of the ore collapsed on the ground conditions on their crusher. So they're down to 2.4. Now they were, and I think they've been very transparent on this in their annual report. They wanted to increase their throughput to make up for the declining grade. So they could open pit their own ore body. They're confined by their underground operations. So they can't expand underground, and now they've got underground problems. So I think their two options are, if you look at it logically, would be Pegmont, 25 kilometers away, would just be trucking costs
just
over there.
mine it and bring it over.
On a clear day, we can see their head shaft. So yeah, we could do that. Head frame. So, and then, or they can open pit. Now, they open pit, I think, just back of the napkin, Pegmont ore is probably more valuable than going that route. So it does make sense. It's just, we just have to come to commercial terms that make sense for our shareholders.
Absolutely.
And now showing that we can go standalone, it at least gives us the flexibility of, okay, guys, we're not giving it to you at any price.
Absolutely.
Right?
I mean, I was speaking this morning about how I like investment ideas that have more than one exit. And this is exactly this. There's the potential BHP or South 32 exit. Yep. There's another mine nearby that also could potentially use your ore. There's that exit. And there's the go and do it on your own because zinc assets are rare exit. Or
there's a hybrid where we bring in a private equity firm. Now that we'll have the PEA, we can go talk to some of the PE firms that have sort of been sitting on the fence seeing if we're okay standalone. A lot of people looking for base metal assets, and there's a lot of management teams that want to deploy into them. So we might be able to sell it if we wanted to a third party. They come in, run it. They could then, if they wanted to do a deal with Cannington or the Chinese group that owns Osborne. So the world kind of opens up a little bit for us, I think, next year.
I love it. Lots of exits. Yeah. News imminent.
Let us hope.
Well, congrats on the PEA. I'm a little ahead of time, but it should be out the door anytime.
Yeah, it's been a long time coming. They always take longer than you think.
Always. Yeah. All right. Well, thanks for coming.
Thanks, Gwen. Thank you.